Hey guys, welcome to the video. My name's Aaron, and if it's your first time on the channel here, welcome. In this channel, I help to break down some of the financial terms, jargon, tips and tricks on money management and how to get started with investing, economics, and just the big wide world of finance. So take a seat, make sure first and foremost that you subscribe so you can check out all of my videos and get a bit of a background on what we've been covering already. Today, we're going to be running over a special topic that I hear a lot and is probably the most common thing that you'll hear when you get started with investing in general. If you understand this, the investing world starts to make a lot more sense and it can help influence your decisions around investing and investing behavior. When you start investing at some point, you're going to come across the term S&P 500. And what does it actually mean? So the S&P 500 or Standard & Poor's 500 is a weighted measurement stock market index of 500 of the largest companies listed on stock exchanges in the United States. So all countries actually have their own exchanges and they'll have different indexes as well. The FTSE, the Nikkei, Australia's got the ASX, but the S&P 500 is purely a culmination of exchanges over the USA. Now, index funds are by far the easiest way to get started with investing. You don't have to worry about putting too much of your money into any one stock or one company, and you get a teeny tiny slither of the top 500 companies in that index. So in order for stocks to be included or companies to be included inside that S&P 500, they have to fulfill certain characteristics, which we won't go into, but you can find online if you're interested in that. At the moment, the top 10 companies that make up 27.5% of the S&P 500 are things like Apple, Microsoft, Amazon, Facebook, Alphabet, Tesla, and all of those big names that you probably heard before. Now, the S&P 500 usually has an annualized return of anywhere between sort of 5 to 10%, which makes it a pretty steady option for those looking to enter the market without having to put in too much risk and score through tons of learning and research. This is why a lot of companies, when you look at what return they bring back, are often matched against the S&P 500 because it can be a lot easier to just put money into the S&P 500 and not worry about the potential of risk putting it into one individual company or individual stock. If you wanted to buy the index, it costs around about $4,000. So at the moment, I think the S&P 500 is worth about $4,125 or something like that. So if you wanted to buy one share, one teeny tiny slither, you'd have to pay about $4,000, which is why you don't find people investing in indexes very much. And that's why they created exchange traded funds. If you haven't already, check out the video, which I'll link just up here, on exchange traded funds, what they are, how they operate, and how you can get involved. Exchange traded funds were made to mimic those indexes, but make them a much more affordable option for a lot of types of investors, especially those just getting into the market. So some of those that match the S&P 500 index are VOO by Vanguard, IVV by iShares, and then SPY by State Street. So any of those are just basically a like-for-like match of the S&P 500, but they're at a much more affordable option. So you can essentially invest in those ETFs, those exchange traded funds that match the performance of the index. So they're literally like for like, but they have a smaller portion of what the index might have itself. And that will just literally follow that. If the index goes up, the S&P 500 moves up, so does that exchange traded fund. So it's a lot easier to get started investing, and it takes sort of the guesswork, the research, the learning out of, I guess, your investment decisions. So hopefully today has helped explain to you what the S&P 500 is, how you can use it as a bit of a benchmark for your portfolio, or if you wanted to choose individual stocks, and that will help you in your investment decisions going on. If you haven't already, guys, please check out some of my other videos on the channel. I'm going to link them just up here. They will help you get started in the investing world and hopefully answer some of the questions that might be in your head as to where to go with your investment decisions. If you have anything else you'd like me to cover, chuck it in the comments below, or please like, subscribe, check out my other videos to help support the channel. Thanks, guys. Hope to see you in the next one.